got to make sure we get the merch in there. Chris and I are trying to figure out what the heck the best camera angle is. Anyway, hello everyone. Welcome back to the rationalinvestor.com's daily brief. This is our sort of pre-show. We'll have the daily brief after party where we talk a little bit more sort of freestyle a little bit. So welcome back to the frivolity. It is Monday here, 30th of January. So we're finally into this FOMC window where we've been sort of talking about this for the past week or so. And now we're finally here. So tomorrow is the first day of the two-day meeting. Things are relatively quiet, I suppose, in the market anyway. Some up, some down, a little bit of back and forth. I don't know whether a little bit of a pullback in price warrants sort of a sell-off into the Fed. This still feels like a very frothy market. And then also too, we had a couple of econs come out of Europe, I think, that throwing a bit of bucket of cold water on the fire. So we'll try and give you, I guess, a bit of an update. It shouldn't be too much of an update today because, like I said, we're sort of in pre-Fed announcement. I don't think there's a heck of a lot of new on the screen. As the breadth indicates here, we're kind of, I mean, we're still pointing down, but you know, the slope of the curves is actually up. A very wishy-washy kind of signal. Not really. I mean, I love when you get these oversold swings or even overbought swings and the market breaks. Those are really easy. When you get these signals sort of like mid-cycle, can break either way. And then also too, we've got the FOMC coming up. I wouldn't even be surprised if this chops around through the rest of the week. And then sort of heading out of the week into the end of the week, we actually start seeing some direction of the new trend. And I almost don't want to get sucked into making a move ahead of that Fed. I was a little concerned when I woke up this morning. I saw the crypto. Basically, this is our top 30 index. I don't know whether this is really the best benchmark for the entire crypto market. I have noticed that the crypto universe is actually moving much slower. You can see both of them are still negative. This thing's gone up and kissed the short-term moving average. I'm not quite sure how to interpret that. Certainly not across yet. Did actually see somebody asking in the lounge, well, what do we do if they're just kissing? And another person said, probably best to wait for a two-day confirmation, or at least, you know, a confirmation close above. And when I loaded up the screen this morning, looking at the crypto market, I noticed quite a few of the crypto names that we've been following recently have actually backed off a bit. I'm not quite sure what I had on here. Yeah, all of the portfolios got moved over. This is supposed to be my crypto watch list. There we go. So right now we got the Dow, or excuse me, Dow. Suppose this is the crypto Dow, if you will. Anyway, Bitcoin down a good $500. So if anything, I've been talking to you guys in the recent videos off of this chart with regard to Bitcoin. Very concerning when you get Willie that stupidly overbought. -10 reading, that's ridiculous. We actually have a confirmed RSI bearish divergence working here now. That's never a good sign. Confirmed bearish momentum divergence in MACD. And we've got the volume impetus. Everybody's just falling asleep here. And that makes sense. We're heading into this big FOMC announcement. I can't imagine any major institutional players putting on big positions right now. So I suppose I don't know how we're going to finish the day, but my hunch is if we're somewhat in this kind of neighborhood, we'll probably see these things tick back down here through tonight. Was a little bit, I tell you, when I was a younger man, it was a heck of a lot easier to get up at like 4 o'clock, 4:30 in the morning to day trade crude oil and gold and the stock market and stuff. I tried to do it here with Chris here over the past month or two, and man, it has been a challenge. So um, had a tough time getting to sleep last night, so as a result, didn't really get up very well this morning. Mondays on day trading were kind of like, meh, the results are sketchy at best. So I missed the opening range trades this morning. Although Chris said gold was, what was it? It was just a small win. I think that's what he said. You hear, Chris?
I am. Gold was actually a miss. I missed gold's trade today, but it was a win. 2 to 1, 4 to 1. Had I been ready, so to speak, to take it.
Hmm. If I understand correctly, on my chart, I had to reboot my computer because couldn't get the microphone to work for this video. The crude, if I understand correctly, stopped at scratch on the open, and then the stock market actually worked relatively well, you said, eh?
Other way around. Crude
Other way
stopped me out.
around.
Yeah, crude stopped me out full loss, and then ES was actually a stop at scratch.
Oh, okay. So I'll try and be a little bit crisper on that. Then I suppose tomorrow, well,
Tomorrow's technically the last
tomorrow and
day,
Wednesday
so
being Fed days, I don't know whether I really want to be too active on the opening range trades. I did notice I had a pretty good setup come in here on the stock market about a half hour, 45 minutes ago. Is actually a pretty typical trade, just coming back against the low end of the range. Maybe in the after party show, I'll walk you through how that sort of set up and developed. So I guess that's your day trader report. Not really too much to get excited about, although it's a half decent long idea. Basically everything that we teach at the program. Specifically, as I said here a couple times, we're in a bit of a news vacuum right now with regard to econs because, of course, we've got the big FOMC event tomorrow. German GDP did come in overnight. It was slightly weaker than expected, and that's basically the headline that came out of the European session. So, in essence, things were a bit soft starting out. You can see actually all the indexes now down, Dow down about 50 points, and NASDAQ, which has been on an absolute tear of recent, off a good 1.25%. So your end result is the S&P's down 0.5%. Not a bad idea just to remember that usually the higher ups, the big boys, they don't really pay attention to the market unless they see at least a good 2.5, maybe even 3% move. And then they're like, whoa, all right, now we got something. All through last week, we noticed that the sort of, not the FANG stocks, but that sort of tech sort of oriented part of the market was doing better. And as well, I should keep this in front of me. The sector rotation model is kind of suggesting that the tech part of the market, consumer discretionary part of the market seem to be a little bit happier, and probably was going to show some outperformance. So I think the 13th was the last day right here. What we got here? First 2 weeks, yeah. So this part of the market really caught my attention. We have real estate way over here, but I really think that the Wall Street higher ups are thinking that this is the part of the economic cycle we're in. Now, this might have something to do with seasonality versus sector rotation. But nonetheless, if we just look at it from a sector rotation, there's technology, there's discretionary, there's consumer communication services. So what are we talking? We're talking the full sort of brunt of the recession, market bottom. the question really, I suppose, is has the Fed finished raising interest rates? You can see early recession, interest rates anticipated to be peaking. And then by the time we actually get to full recession, interest rates are starting to fall. So obviously with the big Fed announcement tomorrow, if they continue to raise short-term interest rates and they continue to talk about the necessity for higher rates going forward and the inflation pressure is still pretty strong, then you're probably going to see the discretionary and technology sector back off a little bit. So it is interesting to see how we got a bid up, and a lot of people are kind of hoping that maybe the Fed's done, maybe the Fed's done, maybe the Fed's done. And actually, there's a gentleman I really like listening to his videos on YouTube, Market Maverick or something like that. I don't think I had I retweeted out his feed, but it's a good feed. And he's under the impression, I thought he was a fairly intelligent gentleman. He's the guy who's done the farts in a jar. I don't know whether you remember that reference from like 6-8 months ago. That was funny. He always used to go on about farts in a jar. Anyway, he's kind of suggesting that you saw a bidding up of the sort of consumer discretionary, especially you saw like Tesla taking off there the other day. And that's kind of on a hope that maybe we're a little bit further along this and the Fed is done. But I don't know. I don't think the Fed is done. Anyway, we'll see what happens. Only time will tell. I suppose, it might be interesting to see. Maybe we get an absolute meltdown ahead of the Fed. I doubt it, but who knows? Following along the January Barometer studies, I have to say, on balance, you better pay attention. 2023 might be one hell of an up year, which is a bit ironic because that's, if you turn on the media, you turn on TV, everything, you listen to Brian and everybody's like, it's the end of the world. Then probably the only guy who actually has it tapped correctly is Larry Williams, and he's in his 80s now, and he's like, I don't day trade anymore. I'm too old for that crap. But anyway, he's been talking about how the inflation cycle seems to be peaking, and don't be surprised if the stock market enjoys a substantial rally. You got to say, we started January over here, and now we're up here. So January Barometer, as January goes, so goes the year. It's probably worth noting. For whatever it's worth, I am hearing over in Eastern Europe, the temperature is ratcheting up. Of course, now the West is going to be sending armored vehicles and stuff to Ukraine. I'm sure that doesn't make Russia very happy. And if I understand correctly, Russia is going through its second mobilization. And there's something like 500,000 new Russians about to be thrown on the front. So, oh goodness, what a mess. Obviously nobody knows how that's going to play out. But it's not good times. The tragedy of it all is a lot of people are probably coming to the market and coming to investing now as sort of starting their journey. And you're coming to this investment landscape thinking this is business as usual. And the sad thing is this is, I would have to say, in my career, I remember the bear market of 2001 very clearly. Liam was just born then. And the whole dot-com blow up, I had to go get a second job just to make sure the rent was paid because things were pretty lean through that window. I remember 1991, same sort of thing. Then there was a nasty recession in Southern Ontario. And actually, it was so bad that I actually moved down to the Caribbean, and I lived down in the Caribbean for a while because there was just nothing going on here in Canada. I remember 1981. That was a pretty nasty recessionary period. So that was when gold peaked. And interestingly enough, I would say 81, 82, 83 is very similar to what we're in right now. And then I've told you guys repeatedly, obviously I wasn't there, but 1941, 42, 43, I think that's almost exactly a replica of what's going on in the economy right now. And even on top of that, the whole Great Reset nonsense, that would correspond with 1941, 42, 43. And then ultimately, as I've showed you before, I think there's going to be a really nasty inflation spike in like 2026, 2027, 2028, which would perfectly align with things like Bretton Woods and Klaus's Great Reset bullshit, right? So anyway, point of the matter here is I am hearing a lot of talk about sort of the Fed is getting their wish, the economy is slowing, seeing a lot of sort of YouTube videos and stuff on the housing market down in the States. The rental market has peaked out and rents are starting to come back down. A lot of the home builders have massive amounts of inventory that it's just sort of overhanging the market. A lot of it's been sold to this investor class, not actual people living in the houses. And unfortunately, when investors, they, oh, hey, let's buy a house. It's a good investment and we'll make great money. If they're worried about, well, we got to fund our retirement, they might all in unison panic dump all these houses that have been bought because the houses are just sitting empty. It's quite remarkable, video after video. Then, of course, we got Michael Burry out there floating out saying, this, and actually it's interesting. I don't know whether I'm allowed to do this or not. Because it's kind of a slow econ and trading day ahead of the Fed. Probably not going to be talking too much about actual new trades or anything today. So I did see a study that I thought was fascinating. I don't know whether I can replicate it in time here though. But Mr. Burry pointed out a chart from 2000 and I think it was 2001, if I'm not mistaken. And he kind of thought, like if I do like maybe two windows here, he kind of thought that he saw some similarities. And this gentleman that I showed you, or at least I made reference, Mr. Farts in a Jar, he was kind of like, there's a lot of similarities here. So if somebody can find that Michael Burry video, I thought that was, or not video, it's just a tweet. I think this might be it, but I'm not positive. Might have been, actually, might have been this one here. Goodness, no, I can't remember. This doesn't look exactly right. Anyway, I do remember something along these lines, and it looked like the stock market was breaking out, but it must not have been off of this NASDAQ chart. And we are just wondering, and Mr. Burry put out a tweet along the lines of, and I'm not exactly sure how he did it, but something along the lines that, hey, this is looking awfully familiar. Might have been something like that. Does that look right? No. Oh, darn, I can't do it. Anyway, this is what happens when you try to do this stuff on the fly. Sorry, guys. Anyway, maybe I'll try and maybe somebody can find that Michael Burry tweet. But the point being that is this a trap? We often actually maybe it was off the daily chart. We often talk to students about don't take a trade just on a trend line break. You really want to see market structure on the other side of a trend line before you get bullish. And I guess the scuttlebutt was, I suppose maybe I can. I don't know. I'm kind of butchering what I'm supposed to be doing here. It's Monday, so what time is that? 26. Let's see. How do you spell Michael Burry? Does anybody know? B-E? Is it B Burry like that? I thought it was a really interesting tweet because I think it was. Yeah, God, now I'm just shooting blanks.
I think it's Michael Burry, Burry.
That's your account code.
Urry like that.
Yeah, and maybe a space there, and I think it's Cassandra, like AEL.
Doctor, they could be this guy here, eh? He's a doctor.
That's a different way to spell Michael. I think
I think that's his face.
that one was only got 812 followers. I don't think that's him.
That's
Michael
probably
spelled with an
somebody else.
Michael instead of EAL.
Michael.
Nope. AEL.
Yeah.
Yeah, Burry. And it's that first one, I believe. Cassandra BC.
Deleted.
No. Cassandra BC, the third, fourth entry, I guess.
This guy here, Cassandra BC.
Yeah.
Oh,
I think
okay.
that's him.
1.2 million followers. All right, there you go.
However, I don't see any of his tweets. So.
I guess I'm not allowed to see what he's tweeting now. Anyway, I'm wasting time here. Sorry, everybody. Point here is lots of similarities in price action between the dot-com boom and what we're seeing in the market now. And Mr. Farts in a Jar was kind of thinking that a lot of similarities here. So just a little bit worried that people might be walking into a bit of a trap. Of course, you can never do these things on the fly very well. Shame, I can't remember which one I did. Might have been off like something along those lines. No, I can't do it. Oh well, fudge. Okay, so all I'm going to do is just say here, just be careful following this Fed announcement window. Market is egregiously overbought, kind of like what I showed you with the Bitcoin chart there. We could really use a bit of a cleanup here. I don't know how far the correction does go, but my hunch here is that once this sort of, usually the seasonal trade is sell the middle of February, or like, I don't know, buy the middle of February, sell the middle of May, you did pretty well. So we're at the end of January. Probably could spend a couple weeks here just cleaning things up and then get ready for a new run higher. That's kind of what I'm seeing right now. You can see US dollar index is finally catching a bid. Is that sort of a buy the rumor kind of idea? You can see this weekly chart. Actually, we've even gotten stupidly oversold on the weekly basis. Don't see that every day. A little bit of a momentum div here. Not enough to get excited about though. On a daily basis, you can see momentum actually is trying to turn back up. Obviously, this is going to be entirely predicated on what the Fed does in the next couple of days. So, but don't be shocked if we have a little bit of a counter trend rally here just to relieve all this oversold condition. Again, first couple of weeks of February, that's what I would be thinking. Specifically with regard to news, obviously this, whenever you take a look at this silly news, you get triggered by a whole bunch of stuff. As I said, Ukraine situation just going on. That was interesting. Boris threatened by Vladdy. Actually be interesting to see if I heard a story yesterday. I couldn't believe this. I thought it was fascinating that Gorbachev and two other guys, I can't remember who they were. They were KGBs. And yeah, oh, there you go. Looks like Eddie found, or Nick found what I was looking for. Yeah, there you go. Oh, you guys farts in a jar. So anyway, this is what I was trying to find for you guys. And this is the NASDAQ from back in 2001. I think that's what that is. Maybe it's 2021. God, look at that. I'm so old. I can't even see what the hell that says. What the hell does that say? 2001. Yeah. And that says 2002. Yeah. And just wondering, like if you draw a trend line off of these peaks, we're breaking out here, and it's a trap, and the whole damn thing rolls over. Maybe this was this might have been oh, the reason why I couldn't find it on the NASDAQ is because it's the S&Ps. Drive me crazy. Anyway, thank you, Nick. And if anything, what a great testament to our community. Our community is just so awesome. It's so cool. These guys, and I thought it was funny. I woke up this morning and Julian's out there banging out more doubles. And people are like, you're going to own half the damn world. Slow down. I thought it was great. Is that like I mean, this guy's a machine. It's absolute, and it's cool to see because it just goes to show this stuff that I teach you guys works. There he is again, banging out over on KuCoin, just having a great old time with the Koreans. I went on it like yesterday. And here's another one. I mean, he's just a bloody machine. Just great to see. Congratulations, Julian. I think you're ready for prime time. maybe Julian needs a spot on our Wednesday shows. Holy moly. Anyway, so the point being, from this Michael Burry tweet, I kind of agree with this, and I'm worried that people are getting sucked in. If you look at, you know, we've shown you that S&P chart before. Let's see. Where are we here? What's the best place to show you it? I guess over here. See that's looking awfully familiar to that image, right? And hearing a lot of people talking about how this is the end of the bear, time to go straight up and all that. And I you know, we have a rule at TRI that really you shouldn't take a trade just on this break. You can see if you had bought on the break of this trend line here, thinking the same thing, you got your head handed to you. In a weird sort of way, we actually really want to see a bit of a consolidation in here and then a confirmation that this is a bull with some sort of W on the other side of this trend line. So that's very dangerous here. Very, very dangerous. And the problem here is that you can't even really say that the market's oversold anymore because we've rallied so far here. So, you know, this is what a lot of they called like dead cat bounce kind of thing. So anyway, thank you very much, TRIers. Thank you very much, team. You guys are awesome. You got my back. I appreciate it. And I'm not, I mean, it's Monday, so, you know, maybe cut me a little slack here. I'm not on my game here this morning. My apologies, everyone. Anyway. Okay, so let's see. We talked a little bit about Mr. Burry's tweet and Mr. Farts in a Jar sort of agreeing with that. I'll see if I can try and find that video for you. I thought he did a pretty good job sort of describing current market state. We talked a little bit about the econs. I have to say, they're not impressive. This is not an environment where it's rah growth. Everything's kicking butt. You know, interesting. China, I guess, is trying to say it's coming back online. I don't know. PMI is below 50 along with the rest of the world. So that makes sense. Services just absolutely cratering. Interestingly enough, China's solution in the past to this problem was to simply devalue their currency. I don't know whether they can actually do that anymore or not. Consumer confidence, holy Jesus, 30? Wow. So nobody's really very happy in Japan right now. It's a pretty nasty market state. You can see with the rising interest rate environment, whatever sort of economic confidence there was, it's getting absolutely destroyed here. France GDP growth rate actually came in a little better than expected. I suppose that's a bright spot. Quarter over quarter, again, a little bit better than expected. Probably nothing to write home about though. Inflation rates ticking down over there in France. Actually, that's a little bit better considering how bad places like the UK are. So it's a bit surprising France is doing a bit better than that. Now, yeah, as you can see, not a hell of a lot of US econs to drive the ship here today. We have, a couple of econs not going to help the Fed situation here. But actually, probably, I suppose, a little bit a better situation. Market was looking for -11 out of this Dallas Fed index, came in -8. But other than that, there's not a heck of a lot of econs to talk about. News wise, as I had said earlier, Vladdy up to his regular games, just being a pain in the butt over there in Eastern Europe. It is interesting to listen to. Oh God, wow, I'm total brain dead today. Peter Zahn, I think that's his name, something like that. Anyway, going on and on and on about how Russia's totally dead. And I don't know how the hell this plays out, but he's basically saying that Russia can't really function without Ukraine as part of its fold because it's just too vulnerable. So Russia doesn't really have any choice. They're basically going to go to the wall, and from what I understand, if this war has to drag on 5 years to reach Russia's objectives, it just might. Anyway, we'll see how it goes. Interesting to watch the football games last night. I don't know whether you watched that. Poor old San Francisco lost a couple of its quarterbacks. You don't see that every day, and by the end of the game, you could tell without their star quarterback, and they were kind of toast. But poor old. All right. So news-wise, not really seeing anything too dramatic. The scuttlebutt is Fed's going to raise interest rates, maybe talk a little bit about cooling down the pace of the interest rate increases. Did see the Bank of Canada governor basically came out and said unequivocally rate decreases are nowhere in sight. So it's not even really a question of is the Fed, are these central bankers going to get happier and friendlier with the market? It's just a question of they're not going to be such jerks to the extent that they've been recently. And Chris's buddy, I won't call him his girlfriend, but
DiMartino Booth. DiMartino Booth.
She said this sort of same thing. A lot of you guys actually that are watching the market right now, you don't even know what an aggressive interest rate environment looks like. And so a lot of people are scratching their heads going, well, why is the market acting so skittish? And the simple fact of the matter is that the central bankers this is as aggressive an interest rate increasing cycle as we've seen since basically the early 1980s. So this is kind of uncharted territory for a lot of market participants, and just the old timers like me. We just sort of vaguely remember back in the early 80s the way Volcker sort of war on inflation and all that. But as I showed you in the broiler chicken show yesterday, this is really more a conversation. And I suppose we'll pick this up in the after party show. I'll just sort of finish off on this note here for this video. This is more a conversation of, where the heck did I put that? The Fedsters, banksters, crooksters, whatever the hell you want to call them, Klaus's great reset, all them BS. Really what they have to do is they have to get some sort of religion with regard to this money supply growth. This is Milton Friedman 101. You want to know why you have inflation in your life? It is this image. And the reason why the prices have gone up so dramatically, so quickly, was because of the slope of these curves. Just like, and here's my country, and there's no end in sight in my country, which is even worse. At least the Americans are trying to get some religion. And as I said, I've been watching a lot of YouTube videos. The US real estate market is calming down. Rents are actually falling in some markets. So they have, to a certain degree, tried to get a little bit of religion in the States. Substitute drama teachers, they're just acting like idiots and completely blowing up our society. So, and I don't know what the end game of this is. Usually the end game of this kind of scenario is at some point people go, these currencies are worthless. Screw it. Let's go use something else. I have a funny feeling that's what happens in 27, 28, but we'll cross that bridge when we come to it. All right. Was there anything in particular that I was supposed to talk about today, Chris, that I missed?
I don't believe so. I think today was a light econs day, light day overall as far as trading goes. So I think we've hit all of our marks.
So as you can see, a little bit of softness, if anything. Maybe some people, Fed watchers are kind of, I think I've warned you repeatedly, you do not want to see the stock market and all these risk assets all rallying crazy like into the Fed. That's not a good sign. Is one day pullback enough to relieve that sort of one line direction straight up kind of conversation? I don't know. And I suppose how ironic if we actually go and M out here and start to correct in earnest, how deep do we actually go here? I don't know. It's a tough one. It's probably going to be something along these lines. Noticed when we did do the study off the lows and that M and bang right into 50% rules, and in comes a W, which is actually totally cliche. So if that's the case, then you can see 50% retracements would be nothing more than just a revisit of this traffic area, 3950 area, maybe we'll call it on the S&Ps. And if I'm not mistaken too, off the higher time frames, this is a lower time frame chart, but off the higher time frames, we have some interesting candle bodies areas down in here to candle body lows to hunt for direction. So we'll see how we go through this Fed event window. And as I said, you probably, if you're sitting there on the sidelines and you're a cheerleader, you probably would be cheering for weaker prices here over the next day or two, which would maybe set up that sort of healthy back and forth, but with an upside tone to the market. And we don't really want to see the market rally. So anyway, we'll see everybody tomorrow morning, see how they set it up into the Fed meeting. If they are pushing it back up top, then that's got to be a major warning sign for us. Also, too, in the after show, and I think Eddie had mentioned it, I think it's not a bad idea. We should probably be thinking about things like what's it cost to go and buy a put option on these major stock indexes. You see all the gaps here. I mean, this is NASDAQ. Usually if energy prices take off, because I'm actually hearing people talking about natural gas starting to turn around. I don't know whether it has or not. Maybe it's flushed out now and it's getting ready to rally. Tough to say. No real buy signal there. But, maybe it might be an idea for us. And I don't know whether NASDAQ's the best place to go. Like I said, in the after party, maybe we'll go look at the options. But you could very easily see a nice little pullback against these lows or against that W. There might actually be some money to be made on the puts going forward here. So I might even have a put idea or two, maybe even a spread on things like SPY to keep the cost down. It's a relatively low little volatility environment right there. The put options might be relatively cheap. And of course, if Mr. Burry's, is this a repeat of 2001 kind of idea? And this is a head fake breakout, and we actually have to go 30% lower. Then, what's 30% of 400? That would be 120 points. So that would actually take us down into that 280 area. Wow. Anybody ready for that? And actually, I like that. I would prefer, and I think I said yesterday, I would prefer for this to happen, because then we can finally fill in all these gaps. Actually, you can see on this particular chart, there's a huge hole in the chart right there. There's a huge hole in the chart there. There's a huge hole in these will have to be filled in at some point down the road. Now, I don't know. Does that happen maybe next fall? They usually say fall is when the stock market really falls apart, or no pun intended. But if Mr. Barry's thinking is correct and it's a repeat of 2001 kind of idea, then 30% correction from these levels is actually completely realistic. So let's keep that in mind. Okay, folks, I think I'm going to leave the summary video at that. Sure hope you got some value out of it. Obviously, ahead of the Fed, we don't want to make any too big decisions. But maybe pop in on the after party and we'll go take a look at some of the options and whether they're priced attractively or not. All right, everybody, have yourselves a great day. PMA for the win. All the best, and bye.